we'd been awaiting Bank of America, as you mentioned, and it looks like we do have some breaking news right now for that. So let's get over to Wilfred Frost. Wilf, good morning. What do you see?
Good morning, Becky. Yeah, this isn't, in fact, the earnings yet. They're probably about 30 minutes away, but they've released their buyback announcement, of course, something that people have been watching closely since the Fed allowed them to start doing that again late last year. They've released the buyback announcement half an hour earlier. So they've authorized a $3.2 billion buyback in total for Q1 of this year and maintained their dividend as well at the same pace of 18 cents per share, which in total equates to 1.6 billion. So in total, 4.8 billion dividend plus buyback will be returned to shareholders during the first quarter. Also, some details on this release about their capital position overall. They're stating that they have 36 billion in capital above the minimum requirement. That 36 billion relative to a total of 4.8 going back to shareholders this quarter. Now, we've, of course, been expecting a statement of some kind. Remember, the Fed announcement allows them to return the average of their trailing 4 quarters of earnings in total. And so they've been waiting for fourth quarter earnings to come out, which will come out in half an hour or so time to state a specific number on this. JP Morgan had said they're going to do 30 billion. That's not in the first quarter. That's over the course of the whole year. And I believe their number for the total of Q1 was 4.8 or 4.6 or something around that level. So similar scale to JP Morgan. Q1 doing the maximum allowed amount based on the Fed's rules for Bank of America. The shares up a little bit in the pre-market. This number is broadly in line with expectation, which is buy back as much as the Fed rules allow us to do.
Yeah, I was going to ask you that. I didn't see where the stock was trading ahead of this announcement. Was it already up? We are looking at markets overall up this morning.
Yeah, I didn't see exactly before the news crossed. I mean, the key point, I think, with all the banks is they were up massively since the start of November coming into earnings. JP Morgan did just about enough with their numbers to hold that ground and not decline significantly on Friday, whereas Citi and Wells Fargo were down pretty sharply. I think in Bank of America numbers, we'll see similar themes to those guys, i.e., a change in direction in terms of provisions for bad loans becoming benefits for bad loans. The question is the scale of that change in direction more akin to JP Morgan's and therefore holding the gains of recent months or a little disappointing relative to expectations like the market took Citi and Wells Fargo on Friday.
Shepard Smith here. Thanks for watching CNBC on YouTube.